Several years ago, I met a gentleman by the name of Ichak Adizes. I, I learned about him by accident. I was in the bookstore and looking for a book on management methodology, and this book that he had written just popped off the shelf. And the name of the book was Corporate Life Cycles. And in that book, he talks about the life cycle of organizations similar to the life cycle of human beings, starting with infancy, going into courtship, the formation of the organization, that go-go stage where everything, you're just selling. It moves into adolescence, and adolescence is similar to that really awkward time in a human's life and that really awkward time in organizational life. It's, at your age. Well, what is your age? Are you supposed to be an adult or are you supposed to be a kid? And you can't help but challenge the status quo. But that's a stage where a lot of organizations get stuck and maybe even go into what he calls early death, because they can't resolve those issues in that adolescent phase of their organizational life cycle. So if you do, then you can move on to what he calls prime, which is basically operating very effectively and efficiently, both short-term and long-term. And he represents this on a bell curve, with prime being the top of the curve. On the curve as it goes down, he talks about your early bureaucracy and aristocracy, and eventually death of an organization unless you're a monopoly and you just get to keep going and nobody really likes it. So as a result, again, of reading that book, I sought him out. Went to a couple of classes, got to meet him personally, and I still continue to be amazed at the insight that Ichak Adizes brings to the methodology of management. Things like, most people think that it's about people. It's that good to great stuff, get the right people on the bus. Well, Adizes takes a little bit of a different approach. He says it's about structure and process first, and then people. And he said that many organizations think that 85% of it is people and 15% is process and structure. His suggestion is that maybe 85% of it is process and structure and 15% is people. And the reason he says that is, if you have the right structure and process in place, then you are more likely to attract and retain the right people. And that getting the right people on the bus, if the bus is broken down, they're either going to become chameleons and not really do much of anything, or they're going to get off the bus. So you have to have a good structure and process and caretaker of that structure and process in order to give people the freedom to use their real talents. Another area that he talks about is in decision making, how important it is to have mutual trust and respect. That decisions made without mutual trust and respect are unlikely to result in the desired objective. And he goes further to define trust as commonality of interest. We can come up with lots of different definitions for trust, but in reference to this methodology, trust is that commonality of interest. So if the parties have common interests, if we're all trying to achieve the same thing, then there is a beginning point for that decision. The other part of the equation in his mind is mutual respect. Now, respect is giving others the sovereignty to have an opinion different than yours. Those differences are what help us make better decisions. So that mutual trust and respect combined is much more likely to give you better short and long-term results.